Elon Musk made a promise. He said SpaceX would never go public until humans had landed on Mars. That hasn't happened. So what changed? $37 billion in losses. That's what changed. And on June 12th, he found someone to hand that bill to. You. Not because you agreed to it, because the system was quietly redesigned. Index rules rewritten, timelines changed, doors opened, all in the last 90 days. This video isn't about whether SpaceX is a great company. It's about whether you're the customer or the product. For 23 years, SpaceX stayed private. While Tesla went public, while Rivian went public, while every other Elon company opened its doors to regular investors, SpaceX stayed locked. Elon said it himself, multiple times, on record. We won't IPO until we've landed on Mars. That was the promise. Now ask yourself, what's different today? Did rockets get cheaper? No. Did Starlink conquer the world? No. Did SpaceX finally turn a profit? No. In fact, last year alone, SpaceX lost $4.9 billion. And since day one, the total losses crossed $37 billion. So why now? Because the private money ran out. Venture capital, private equity, hedge funds, they had been funding SpaceX for years, but even they have limits. And SpaceX kept burning through cash faster than rockets burn fuel. So Elon did what anyone does when the rich guys stop writing checks. He found new money. He found you. Let's talk about the price tag. $1.75 trillion. That sounds impressive, until you understand what you're actually buying. Last year, SpaceX made $18.7 billion in revenue. That means you're paying $94 for every single dollar this company earns. 94 to 1. For context, Apple IPO'd at 15 times revenue, Amazon at 27 times, Netflix at 4 times. SpaceX is asking for 95 times. On a company that is losing money, but here's the part that should make you stop completely. Just 11 months ago, and SpaceX was valued at $400 billion in a private sale. Same company, same rockets, same Starlink. $400 billion. Today, they're asking $1.75 trillion. The business didn't grow 4 times in 11 months. Revenue grew by a third. What grew 4 times was the story, and the story was specifically inflated right before you were invited in. Goldman Sachs, the main underwriter, leaked a forecast saying SpaceX AI revenue would grow 100 times by 2030. Morgan Stanley leaked an even bigger number, $3.4 trillion in revenue by 2040. That would be more than any company on Earth today. These aren't analysis. These are advertisements, leaked to newspapers, days before your money was needed. Everyone pictures rockets. But rockets are not where the money comes from. SpaceX has 3 businesses inside one company. Starlink, the satellite internet service, brought in $11.4 billion last year, 61% of all revenue. And it's the only part actually making a profit. $4.4 billion operating income. The rocket launch business brought in $4 billion, but lost $657 million. The AI segment, XAI, Grok, the data centers, brought in $3.2 billion, but lost $6.36 billion. So when you buy SpaceX, you are buying one working engine pulling 2 broken cars behind it. Now, yes, something changed recently. SpaceX signed a $1.25 billion per month contract with Anthropic and a $920 million per month contract with Google. For use of their Colossus data center, that's potentially $27 billion a year from AI alone. Sounds incredible. Until you read the fine print. Both contracts have short notice cancellation clauses, meaning Google and Anthropic can walk away anytime. The revenue everyone is pricing in can disappear before you finish reading this sentence. Here's how an IPO actually works, and nobody explains this part. There are 2 prices, not one. The first price, $135 per share, is the IPO price. This goes to Goldman Sachs clients, hedge funds, institutions, insiders. They lock in at $135 quietly, days before trading even opens. The second price, is what you pay. When SpaceX opens for trading on June 12th, it will open higher than $135. Probably much higher, because the hype is engineered to push it there. And the people who bought at $135, they're standing on the other side, ready to sell. To you. This is called a relay race. And you are not the first runner. You are the last. The baton, the risk, has been passed from insider to institution to wealthy client. And finally, it arrives in your hands at the highest price, with the most risk and the least upside. SpaceX actually did something unusual here. They reserved 30% of the IPO for regular retail investors. That sounds generous. It isn't. When Wall Street suddenly becomes generous, that's not kindness. That's a larger exit door being built. More retail money in means more insider money can get out. Now here's the part that almost nobody is talking about. Index funds, funds like NASDAQ 100, total market funds, they automatically buy every major company. Your retirement account, your 401k, your mutual fund, they all hold these. Normally, a new company has to wait months, sometimes years before an index will touch it. The S&P 500 requires 12 months of trading and quarterly profits. SpaceX has neither. They were rejected. But NASDAQ? NASDAQ rewrote its own rulebook. In March, just 3 months ago, NASDAQ introduced a fast lane rule. It let SpaceX enter the NASDAQ 100 just 15 trading days after listing. Then FTSE Russell changed their rules. MSCI changed their rules. CRSP changed their rules, all within weeks of each other. All with one thing in common. They let SpaceX in early, and here's why that matters to you personally. Total market funds move even faster, buying in as little as 5 trading days. That means if your money is in any NASDAQ fund or total market fund, the machines will automatically buy SpaceX for you, whether you want it or not. At whatever inflated price the hype has created. No vote, no choice, no warning. The price gets artificially pushed up by forced buying, and that artificially high price is exactly when insiders start selling. You are not the investor, you are the exit. There's one final trap, and it's the cruelest one. Lockup expiry. Right now, only 555 million shares are available to trade. That's less than 5% of the total shares. The remaining 7.5 billion shares, held by insiders, employees, early investors, they're locked. They can't sell yet. But locked doesn't mean gone. Think of it like a dam. The water is building behind it. Billions of dollars worth of shares held by people who got in at $5, $10, $20 per share, and the dam has a release schedule. First release, just days after SpaceX's first quarterly earnings report. Likely late summer. Second wave, after the next quarterly report. Final wave, around the standard 6-month mark. Each release, a fresh supply hits the market. Each time, the buyers absorbing that supply are regular investors who got excited and bought in. And the timing is not accidental. These releases arrive exactly when the opening hype has faded, when the headlines have moved on, when the crowd of eager buyers has thinned, fresh supply, fading demand. That combination has one outcome. Facebook IPO'd at $38, dropped to $17, down 54%, before recovering nearly a year later. Robinhood IPO'd, doubled in its first week, then fell 82%. Rivian opened up 22%, then fell 67% over the next year. More than 90% of IPOs trade below their first day low at some point. Not their high, their low. The pattern is not a coincidence. It is the design. SpaceX is a remarkable company. The rockets are real. Starlink is real. The ambition is real. But ambition is not a price. At $1.75 trillion, you're not buying a great company at a fair price. You're paying today for miracles that haven't happened yet. You are the last runner in a relay race designed by people who were already at the finish line. Elon broke his promise about Mars. Don't let him break your portfolio too.